So here you have an LLC that's not just owned by the C Corp, as so many people do with trust, but you've got a buddy here and you've got a buddy here. Each one of you owns only 1% of this multi-member LLC. This is the thing that's doing the business and taking the risks in the business marketplace, where you could get sued, and everyone gets paid out of here either from a contract or from a distribution, or possibly even guaranteed payments if they're doing things specifically in the LLC. And if you're making more than $80,000 a year, then having it go through an S corporation that's a single member is usually the best way to go in the state in which you live. Getting paid this way means there's no double taxation. It's all just going to flow through to you one way or another. Then because the LLC is the only one doing business in this case, actually out in the real world, it makes $200,000. $100,000 is extracted from it through a contract, through an S corp, whatever, to this member. Now remember, the two guys in here only own 1% each, and we've set up our bylaws and operating agreements so that we bifurcate control from ownership so that they each have 33%. The C corp owns 98% of the LLC, but also has 33% control. So now 98% of the profits flow through to this C corp, where it is taxed at a flat rate of 21%. And there is no tax bracket in America that if you're trying to pull money out of your LLC that will do better than 21%. From an asset protection side, if someone sues you, you've only got 1% interest in this company. And since the C corp does no business in the real world, it can't really be sued and holds all of your personal assets for the next 2 to 500 years, however long you can visualize. Now, putting you at risk is the idea that you do hold shares in this company personally. We move those shares to our irrevocable non-grantor dynasty trust, an estate that allows dynasty trusts to last in perpetuity, held by a separate trustee. And now we have no ownership in the C corp or any of the assets in the structure except for the 1% of the LLC that we own. Then, because C corps don't require you to have ownership, we can be a director and completely control this C corp without any direct ownership, which is what Rockefeller's always really talking about. Own nothing, control everything. Taxed at 21%. This is a superior way to deal with this. And some folks are going to say, what about the AET and the PHC? All of that is managed inside the operating agreement, and for the fact that there is no actual earnings left in the C corp because of some other things that we can talk about later.